He joins us live from his lovely office from Kochi. Porinju, good morning. Thank you for joining us. Now, everyone is wondering why small and mid-cap stocks are melting. The index itself is up 20% from its all-time high, and individual stocks have fallen more than 25 to 30%. Now, you are a mid-cap maverick. You understand the small and the mid-cap space like nobody, and this kind of selling, I'm sure, is quite gut-wrenching.
Yes, good morning, Nivanj. This kind of a selling and the mid caps and small caps coming down, it's a very normal kind of a phenomenon in the market. See, people who have seen markets only in the last 5 years, there can be some kind of panic or there is no tomorrow kind of feeling coming to them. But people who have seen the market for 10 years and 20 years and 30 years, this is not anything unusual in the market. So I feel this is a great opportunity, or I would put it, this is another opportunity for stock pickers. Especially, India has, millions of new investors aspiring to invest in the equities, and this is a historic phenomenon. Millions of people, tens of thousands of households, middle class people, they want to try first time equities in their portfolio, other than gold, real estate, and bank deposits. So we are at such kind of an inflection point. So this is a beautiful thing happening in the market where you get stocks in the world's largest or the fastest growing economy, at reasonable levels, and where the economy is going to grow at 7.58, 9% kind of expectations in the coming quarters. So I think it's what has happened is it is cleaning up the market with the over leveraged positions, and people have to come out of the complacency. In the last 5 years was very, very easy to make money kind of a period. So now 2018 we have entered into a period where you have to be a smart stock picker to make money. You have to be conservative, and you should not get or go by the market frenzy. So people have learned lessons, those who have come new to the market also. So, and market is very sober, comfortable valuation, and I feel very good at this point of time. If the new money coming into the equities, it can be very comfortably deployed with a margin of safety. So that is how I am seeing the market today.
So are you, and I don't want to get this one wrong, Porinju, because you got a fan following, and also you got thousands of or millions of clients who've invested money with you. Your view is that in the way you manage money and the fact that you run a portfolio which is largely mid and small cap facing, your portfolio strategy has not changed, and you are not worried about beginning of a bear market in the small and the mid cap stocks.
Yes. See, value investing, people cannot change the basic principles of value investing, but people can adapt to the changes happening in the economy, in the generations, and can get into the futuristic businesses. So there, people have to be flexible, and the basic principles of value investing never change. From Graham to Warren Buffett to anybody, it is always very same. So when you see the value, value investing is very simple. When there is a significant discount to the value, when you get the stocks at, priced significantly discount to the value, people buy it. But then assessing this value is all about value investing. So there people differ. That is why the stock market exists. Something is priced today at 100 rupees. I may be seeing a value of 500 rupees in 5 years' time. Or somebody else in a local big brokerage may see the 100, it can go to 115 rupees in the next 1 year. So there are different kind of different ways of looking at a value stock. Once you identify it as a value and investable quality stock. See, India, we have a very large number of stocks which are not of investable quality. And, I used to talk about chore companies as a theme. So when the markets fell recently, a lot of people are telling Porinju has been talking about chore companies and what happened now. See, I have never asked anybody to invest in chore companies just because they are chore companies. What I have been telling, look at some of the chore companies in India which have symptoms of change, which are coming to the professional style of management. And if you find them early, it is a wonderful opportunity. And this is a special season of opportunity that way in India.
Porinju, hi, morning. Yeah, go ahead, please.
Yeah, no, please carry on.
No, please finish your point.
So the same time, to find companies and invest, for the new investors or amateurs, it may be not that easy. For them, it is always safer to stick to companies which have got proven track record, and with the big picture, how this company is going to take shape in the next 5 and 10 years in this country in the given economic scenario. So there are well identified smart companies, which may be at a high price earning multiples at 30 and 40, but they have got a relevance going forward. And these companies are never going to be cheaper. And you might have seen in this kind of a fall, what happened in the last 2 months. Some of these companies are very, very strong. They are not falling. Maybe they might have fallen 5% when the market fell, say 15%. So that's a kind of, so there are various style of investing, and every style is not suitable for everybody. So people, each individual, each investor who are capable of independently taking decisions, they evolve some kind of style of value investing. So anyway, now coming, so that way, what I was telling you, don't go after the chore companies just because they are chore companies. Recently, somebody was replying to my tweet. So what happened to Videocon? I asked people to buy chore company. So see, I have never recommended this stock. In fact, I have twice in the last few years have been cautioning people about investing in Videocon as such. Because of the big mismatch I am still seeing, there is a mismatch between the asset and liabilities. So people should be very careful. We will see at least 25% of listed Indian companies going out of business in the next 10 years' time. They won't be existing. So there are such companies also. And most of them will be chore companies. So here what we are talking about is structural change happening in the economy, which is very important for equity investors. We cannot forget that. Now India is coming out of the demonetization blues, as IMF was putting it. And we are slowly coming out of the crisis of the implementation of GST. But GST is very important. We should appreciate the government for taking that step and doing it once.
Right.
So this,
right.
And now we have another. The banking system is getting cleaned up for the first time. We have been accumulating the debt over a period of many years. Now we have no choice. We are cleaning up the banking system, which is also in the long term. But there will be short.
Porinju, we've promised our viewers that we're going to take up their queries. So let me take a chance on this one. I'm not saying that this is a chore company by any standards. But what about Fortis? Considering, beleaguered names like this are finally beginning to see some light at the end of the tunnel. There are marquee names like Radhakishan Damani picking up 0.5% stake. There's finally a deal in place with Manipal Hospitals. Saurabh Bhambre has written in on Twitter and he wants to know what is it that you think of Fortis now? Is it a good buy?
A company cannot be chore because only people can become chore, that way. So now Fortis, there is no promoters, no management. There is a management team, of course, functioning, but it is out of that problem. Now we have to see what is it worth and whether the which company or which group or which entity is going to take over this company. So that way there can be values. I don't know. I don't want to comment about it at this point of time for technical reasons. But Fortis was a chore company, means because the people were mismanaging it without any respect to the minority shareholders. So basically themselves. So now it is out of that. Hello?
Yeah, got that one, Porinju. Just some other queries then, and this one is from involved.in website. Akshay wants to know what is your outlook for the cement sector in the next 2 to 5 years. So he's not looking at a short-term horizon, but a more long-term growth vision that you may have on cement, and if you like any of the stocks.
To be very frank, I'm an industry specialist, as such, but cement, despite the high prices they are charging, there is no big change happening in the profitability or the growth what have been expected. But things can pick up. I think the kind of infrastructure projects India is visualizing, is trying to implement, and the kind of money which can require to be invested in that sector. One cannot be bearish on cement companies at this point of time. Some of them, I don't want to again tell the names. We have been holding Orient Cement for a while. It is not a big performer, but it's very safe. It hasn't moved up or down in the recent past. So maybe some of these companies are going to give you 20-25% CAGR at least for next 3 years. But be very selective. I don't want to name any company, to be frank.
So, Porinju, in terms of an investment approach, are you fully invested in this market? Do you have more ideas and less flows and less cash? Or you are sitting on some cash hoping that when the risk unwinds, this market will give you better entry points?
I have been 100% invested since 2002. Since 2003 in portfolio management. We started operations in portfolio management in 2003. So last 15 years, we have been fully invested. And we don't try to time the market. Even the previous day of the big fall in 2008, we were fully invested in. And I had an instance, the previous day of the big fall in 2008, January, I remember. So somebody invested 25 lakhs. We invested fully in the same day in 5 minutes. So next day the market was falling. In a week there was big damage. So investor was querying, why didn't you wait? Why did you invest all the money in the first day itself? So it's a very serious and a relevant communication from a client. But we gave all the gyans, we don't time the market and kind of things. And I remember this Navy from 25 lakhs, it had gone down went down by 37%. We had analyzed this particular account, which came at the peak of the market. But later it has gone manifold. So that is why I very often maintain investors, the real investors, don't lose money in market corrections, including that of 2008. Who lose money? The people who do monkey jump, or when they sell when the market is weak, when they buy when the market is very strong. So that is called trading. It is not value investing. Value investors have never lost money in India. And value investors are not supposed to put all the money into one particular stock. And now, when I say this, people will say, what happened to Videocon? What happened to people who invested in Satyam? See, value investing has got certain disciplines, certain parameters to be kept. So that is what we call value investing. So I strongly feel, I still can tell you, which I maintain, investing in equities is not risky. It is never risky. But you have to, when you invest in equity, you should have that basic knowledge. Either you do it yourself or with the help of knowledgeable people or experts, and create a portfolio of stocks, looking at the economy, where the geography where you're working in, and looking at the future, next 5-10 years, you pick stocks. Investors had no opportunity to lose money in the last 30 years in India, I'm telling you.
Okay. So, Porinju, what I'll do is that I'll take some very quick, queries which you've got from social media, and without getting too much into small caps or mid caps, I'll talk about themes and ideas which you've discussed in the past. You've liked HFCs in the past, and within HFCs, you like Canfin Homes. We've got this question from Rajshekhar Mahapatro. He wants to know that at a time when interest rates are likely to move higher, what will happen to NBFCs and HFCs, and in particular Canfin Home Finance, because there is a M&A activity which is due there.
Yeah, sorry, I'm not very competent to answer, about Canfin Homes. I'm not following the stock, or I can't talk the fundamentals of the stock. But generally, the NBFCs and microfinance kind of, we have been avoiding this all through our portfolio management period. So one thing is, of late, there's too much fancy. They were all in a sweet spot. If you see the last few years, very high, I would call it unsustainable kind of margins, the NIMs. it is not going to survive like that. Everybody is jumping into the bandwagon, and there will be a lot of competition, and there is risk. So I think the current, even today, the kind of valuations given to these companies in terms of the price to book or the price earning multiples, it is not looking exciting to me.
Okay. The other question, Porinju, and that's a very interesting question, something which is not a stock specific question, but it is on the solar power. Now, there was a huge focus from the current administration that they wanted to make India power surplus. But in process of doing that, we have not seen a huge appreciation in some of the solar generating industries. Why is that?
Nikunj, it's a very funny space. In fact, I am very bullish on the sun, but downstream, the people converting that into power has had a very bad times in India because of the the legal issues and governments, because in this thing, state government and central government are involved, and they have failed to really, to meet with all the promises given to these people who have been producing solar power. And it is not going to be a very easy space in India, I feel, even going forward. Maybe some companies can emerge with a lot of competitive advantage, I don't know. But today, there is no visibility to invest in solar power related companies at this point of time. We don't have many companies. I was holding 6% of Select Energy many years ago. When I found, I bought it at 140 crores market capitalization, when the cash was 600 crores with the company. So, and we sold the stock when it came very near to the value of the cash. And the stock hasn't moved in the last many years afterwards. So that was a common book. Even they might have found the promoters are very good. They have been very capable kind of guys, but they found the space very difficult to make money. So those gray areas still remains in the solar, somebody trying to make solar power business. And this is a phase, where it's a transformation phase. But one thing I feel personally, in spite of all those noises about green energy, the alternative energy, I think now there is a trend we are going back to thermal power to some extent. Maybe we can't ignore that. I would like to recommend a stock or ask people, just explore. I'm not very sure about the investability. I was looking at BHEL. Nikunj, can you hear me?
Yeah. Yes, BHEL. Haven't heard that about that company in a while now. So I'm curious to understand, why do you like BHEL?
Yeah, BHEL. This is a company. The negatives, almost everybody knows about the negatives side of the company. This is one of the PSU company which has been managed well and created wealth, in fact. And now the non-thermal business segments of the company can grow very big. That's what I feel. Now there are some non-thermal opportunities are emerging, especially with regard to the desulfurization. It's a 1.5 lakh crores opportunity in India regarding the desulfurization of power plants. So over a period of time. So I think a lot of that business can go to BHEL. But they are very strong in railway business, though it is small segment today. Even they can perhaps they can contribute to the bullet train kind of concepts coming up. So BHEL is at around 31,000 crores today, zero debt company. The enterprise valuation is 30,000 crores EV. I feel this is something one should explore. Please don't go and buy it. I was just looking. I haven't got any position, or we haven't invested in the stock yet. I'm just looking at that company. So even the electric vehicle segment, they may have a role to play. Now ISRO, the ISRO has got technology for the lithium battery to be used in the space missions. So the lithium battery, how that can be utilized for the commercial vehicles, the EV we are talking about, the electric vehicles. I think there is in the public domain, I was just reading recently, ISRO is transferring the technology, lithium battery technology to BHEL to commercially utilize that for the EVs. So there can be such kind of future. This is a wonderful engineering company with a lot of skilled engineers working. This is something like L&T to some extent or Siemens. So BHEL, if little more dynamically managed, can create wealth from the current 30,000 crores. So these are the old stories for people entering to the market today. But some of these old stories can come back with a lot of relevance going forward. So I think this is a company to watch. And I would like to disclose I have no investment in BHEL.
Okay. Post the PNB fraud case, Porinju, the one sector which has really seen a massive correction is the entire banking pack. And unfortunate as it may be, it's not the selling has not been restricted to only PSU banks, but it's trickled in even to the Yes banks, ICICI Bank, Axis Bank, the large private corporate banks as well. Shyam Murli here wants to know, for instance, is Federal Bank a good buy or not? He holds some shares. I'm not going to get into his individual account holdings, but have you been a buyer in the recent bout of correction that has played out in banks? Any of the names?
Okay, this banking scam is the hottest issue in the stock market. Every investor has been talking about. Now the PNB fraud or the scam. So, in fact, the knowledgeable people in the market were knowing these things. A lot of things are going to come out in public. I remember many experts have been talking about, the potential defaults, frauds, and large NPAs still to be to see the light. People have been talking about it in the last 2 years. Now the point of time has come, it's all coming out. Actually, now the PNB fraud, you can't see it, as a single incident. See, there is a tendency in the society, I would say. What this is reflecting, it's nothing but the erosion of values in our society. Wherever people get an opportunity to steal, to defraud, to make money, they are utilizing that. So the only way is to make compulsive, systems and procedures to be followed in the banking system. In fact, India's banking system has evolved over a period of time with the wonderful systems and process. And where we are failing because of these corrupt minds working in politics or connected, various aspects of it in the banking system itself, the political involvement, many other things have been happening in the last couple of decades in an unsustainable manner. So we have this very bad outcome now triggered with the PNB scam. Many others are also defaulting. So I think in one of my couple of months back, one of the interviews I was talking about, when you asked about, I think Nigunj asked me about the PSU bank. So what I think I remember what I replied, I have got better things to do in the market. So the situation is still that, I'm very happy that we never bought a PSU bank in the last 15 years in our portfolio management. So this is because knowledge about what's going on in PSU banks. So now, first time, we are getting the system right. We are attempting to get the system right, and this will go a long way in a positive manner. But there is no takeaway for the equity investors from this banking scam, which stock to buy or sell. Of course, this PSU banking system, now Uday Kotak was talking about, the private and public sector banks, businesses are going to be 50-50 in the next 5 years' time, in the few years' time. So that is indicating more business in the private banking system. So Federal Bank maybe a stock which is very safe, I feel, and can grow, but it's very difficult long term.
Okay, Porinju, thanks so much for giving us your in-depth views on various sectors where you're finding investment opportunities and what is it that you've made of the recent correction in the market. Porinju Veliyath says no need to worry. This is just part and parcel of the game. Be patient, stay invested, look for opportunities in this correction, and a year down, this is all going